Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over a bunch of different ratios to see how the valuations are changing against each other. It's an asset versus an asset, priced against each other compared to history. What it will tell us is the relative valuation over time. I've looked at a lot of these ratio charts going all the way back as far as the data can go for a lot of these different assets. So I know roughly where a lot of these are cheap, where they're expensive. And ratios, even though they're cheap or expensive, doesn't mean that they're going to immediately move against each other. Those are dependent on the market conditions and we'll say, the preferences of how money is flowing in the system at that time. But what it will do is it will definitely give you a valuation perspective compared to history. And what you'll see is over a very long period of time, assets just trade in a valuation channel against each other, expensive, cheap against each other. And generally speaking, commodities revalue themselves to a higher valuation during inflationary periods where a demographic seems like the ones in the United States, since all these are priced in dollars. It's when the dollar's value goes down and the demographic comes into home buying years and that credit expands. That is the link for commodity booms. That's when we see the commodity to stock ratio go favorable for commodities and commodities outperform. So we'll look at a bunch of different commodities here. We'll look at some of those ratios as well, stocks versus commodities, and see how they're performing over the short term, short to medium term. So here is platinum. This is going all the way back to 1998. It is still at a very cheap ratio down here. We've broken the downtrend here. You can see the break of the pattern to the upside, where platinum started to outperform gold, and we've gone sideways for a little while here. We're still at a very cheap ratio of platinum to gold. So platinum is still incredibly cheap against gold at this time. We can also see back at the last bull market, the ratio took off and went to a ratio of about 2.3 as a peak almost, around 2.3. There's another 2.3 up here. So it was a double top during the commodity bull market that occurred in that section there. That's a commodity bull market. What I think is coming is a commodity bull market. I think this ratio is going to go up and it's going to revalue itself to a more expensive level. Right now, we're at 0.47, which is incredibly cheap. Platinum versus palladium, it has made some progress. I actually swapped my metal that month right there. I think it was 0.35. It's now at 0.74. So I've doubled my ounces of palladium already because I was a palladium holder from palladium back in this region up there, held it all the way down here and swapped it right on April of 2020. So this is coming on up a little bit. It's really palladium that's, well, platinum went up a little bit, but palladium fell as well. Palladium's now like 1250 or something like that, $1,250. When I swapped it, it was around 2,800 or something like that. But right now, it is working its way on higher, and we just got to be patient. And I think that will continue to outperform. Platinum will. So platinum's cheap against palladium, and then platinum's also cheap against silver. We've broken out here, and we're doing a little retest here. And now it's just a matter, I think, of being patient and waiting for platinum to outperform all of the other precious metals. Gold versus silver. Silver is cheap versus gold. We're at a ratio of 84.4. And I think this is going to work its way lower when the commodity bull market goes into wave three. Palladium versus silver. Silver continues to outperform palladium. That is what I had expected since 2020 was a large decline in this ratio. And that is exactly what is occurring. I swapped my metals this month here, right in April of 2020, and we're getting a 168 ratio all the way down to 61.47. I chose platinum just because platinum was also cheap against silver, and it was the cheapest metal. So that's what I swapped the majority of my stuff into at that time. But I do think that this is going to work its way lower and lower and lower, and it's not going to do it in a straight fashion, but it's going to bounce around. It's going to work its way down lower to probably a bottom that goes below 20, is my guess. So silver is still incredibly cheap. Dow Jones versus gold. We do see a move higher here where Dow Jones went up a little bit against gold, but I think overall um, we are going to get a decline in this ratio where it compresses down lower. I think that we are in a inflationary environment because the 40-year downtrend has been broken on yields. Right? That I'm specifically talking about the 10-year yield and the breakdown there. With increasing interest rates, generally speaking, you'll get a outperformance of gold versus Dow Jones or stocks. Stocks are incredibly overvalued, and gold is incredibly undervalued. So overvalued for stocks, undervalued for gold, and that valuation is still at a valuation that is the same as the late 1920s bubble. So we have a long way to go down, but that doesn't mean it's going to go straight down. We could still go up before we head lower. Gold versus, let's see what we got here. Which gold is it? Gold versus Dow Jones. So I just swapped it. What we see here is that double bottom pattern that is developing. These do take a long time. This was from 2000 all the way up till 2011. So this is 11 years of gold outperforming Dow Jones. I think that we've broken the downtrend line. We've got good support right where it's at. Somewhere in this general vicinity, it's going to come back and do a retest. And then we're off, I think, to the races where gold's going to outperform Dow Jones for another decade or something like that. Gold versus oil, we are still at cheap levels for oil. The ratio's at 27.29. 30 is a very cheap ratio. 30 is roughly right where it's at, somewhere in that range there. We went to anomaly levels here. That was ridiculous. That was the opportunity of a lifetime. But we are still very cheap, and I do think that we are going to head lower and compress this ratio over time, and I think there's going to be an energy crisis. I think it's still ahead of us. Energy crises occur when there's not enough energy for money in the system, for credit or money. It doesn't mean that we were going to go into that immediately. It could, but we're going to have to wait and see. And it's the ratio of basically credit in the system divided by oil. And this is crude oil divided by natural gas. Natural gas is still very cheap. I talked about it at 39.4 and said natural gas is one to really look at. And that has come down. We're down to 25.4. And I do think that this era is where natural gas could become expensive against oil at some point and the ratios stay low like this. We've been at a ratio that stayed pretty high so far. And I do think it could be a potential double top. Kind of a Batman pattern that eventually work its way down lower down here, which means natural gas could vastly outperform crude oil. Crude oil versus gold. This is a crude oil dominance. This is gold dominance. When we're in a disinflationary environment, gold outperforms crude oil because gold is less sensitive to inflation than crude oil is. Crude oil just broke out here in 2021. It's doing a return move, which is going to be complete at some point here. And then it's going to, I think, move on higher, which means crude oil, if we're in an inflationary environment, this is exactly what we would see, is crude oil outperforming gold. And then if we're in that environment, we're going to see a large valuation move in crude oil. This is crude oil versus Dow Jones. Another look at it, another kind of one of those double bottom type deals. This is from 98. This is when the commodity to stock ratio bottom was right here. Went all the way to the top where the commodity stock ratio topped in this is 08. I think that we bottomed in 2020 here. And then I think we're going to move on up all the way to the top here, probably. or even maybe higher. And then we're going to do another similar move, just like we did in the 2000s. It could be bigger, though. I mean, we could go all the way back up here, even, which is possible. So crude oil, I think, is going to outperform Dow Jones, and I think crude oil is incredibly cheap against stocks. Dow Jones versus crude oil, so I just flipped them around. You can see last bull market, we peaked, we came down, we had another kind of peak here at the white line, and then we went on and compressed down, way down to a very low level where crude oil outperformed Dow Jones. We did the same, it's a similar setup. We peaked here, came down, we're coming back to that white line, and I think we're going to compress down whenever it determines it wants to compress. We could go back a little bit more if it wants to, a little bit higher where crude oil underperforms Dow Jones for a little bit longer, and then we'll get a turn where crude oil will outperform potentially. Potentially, it's the same setup as it was in the mid 2000s. Dow Jones versus natural gas. We're at a very cheap level for natural gas. This is a great spot to be looking at natural gas because of the valuation. You can see that we're also in some gigantic megaphone type pattern, perhaps. And if, and yeah, I was gonna say if we flip it around, we could also see it'd be at the bottom here, and I think I do have that flipped around. Uh, Bonds versus gold. Gold's just outperformed the entire time. We've got gold versus bonds just flipped around. You can see it's going up, 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 up. Gold outperforming. We've got natural gas versus Dow Jones. So that's the one I was talking about flipping it. So Dow Jones outperformed here. Natural gas outperformed there. Dow Jones there. And we've broken that down, the pattern, the downtrend line. We've broken out. We've done a retest. And now it's time to, I think, outperform the Dow Jones Industrial Average. Natural gas will. So that's where we are with natural gas. I think natural gas is a huge opportunity. Copper to gold ratio. This is okay. So when this generally goes lower, that's signaling a problem in the market. So we dropped off a cliff there in '08. Big problem in the market. We gathered ourselves for a little while, consolidated sideways. We're still consolidating, and we haven't broken out of this big, gigantic downtrend line here. If we were to break out of this, that is signaling extreme tightness in the economy and probably in copper. Copper is going to have some very tight markets coming up in the mid to late 2020s. I'm talking really tight. Um, some people expect copper to go up manyfold, and I think gold's going to go up manyfold too. But right now, it looks like copper's got a little bit of a run at it, a little bit of momentum. We pulled back recently, but that still looks good to go higher, where copper could outperform gold in the short term. Baltic Dry Index versus gold. I know some people say, oh, Baltic Dry Index, why are you comparing it to gold? Guys, it's just an inflation adjusted Baltic Dry Index. That's all it is. Here's your double top. If you notice, this ratio went from a very low level to a double top, and then we went down to a very extremely low level for a period of time. So we're in a bear market for Baltic Dry Index. I do think eventually this is going to work its way on higher if we're going to ship a whole bunch of things around this world. I also think that shipping it may not be the same routes. It may change depending on where the materials are in the world. So they may be in less favorable areas for shipping potentially. But Baltic Dry Index is incredibly cheap. It almost looks like the natural gas chart to Dow Jones to natural gas. Let's go back real quick. Dow Jones to natural gas. There's your double top. And then what's going to happen is this is going to go all the way back down and compress to a very low level, like it did down here. That's your double top. The same chart as Baltic Dry Index to gold, where gold outperformed Baltic Dry Index during that time. But I think Baltic Dry Index can outperform gold here at some point here. Gold versus the consumer price index. So this is basically gold divided by the consumer price index. Massive outperformance here in the 1970s. Huge outperformance. Then we went into a gigantic underperformance where gold consolidated for a very long time. But what we're doing is we've got our lows that are stepping up into this line, and I think we'll eventually break it and work our way on higher in some gigantic fashion where gold accounts for the inflation in the system again. And that's where I think that's where we're going to go. That's where it's going to head. But that's where I'm going to stop it, guys. That's what I've got for today. If you guys like this content, give me a thumbs up. Subscribe to the channel. Subscribe to the website if you guys like this type of data. You guys can ask questions directly if you're a platinum member. We have a question and answer session coming up at 5 p.m. Mountain Standard Time on Sunday. So if you're interested, you can definitely attend that. We go into individual companies. You can ask me about companies. We go over what I think looks good and all of those different things. You can use the word discount in the coupon code if you'd like. And that's what we've got for today, guys. So that's all I've got. We'll catch you later. This is Finding Value.